Welcome to Fintech Frontiers, where we explore the cutting edge of financial technology innovation. Today, I'm excited to be joined by Matthew Godley, the co-founder and CEO of Spendly. Matthew, thanks so much for taking the time to chat with us. Spendly is doing really fascinating work in the FinOps space, using AI to help companies optimize their fixed operating expenses and unlock significant cost savings. I'm sure that's a very popular capability these days. So I'm looking forward to diving into your story and learning more about the innovative approach you're bringing to the market. So Matthew, tell us a bit about your background and what inspired you to start Spendly.
Well, thank you. It's a pleasure to be here, Stephen, and appreciate being on the podcast. A little bit about myself. I'm from Charlotte, North Carolina. Graduated with a degree in economics from Denison University, and I've been in startups my whole life. Literally launched my first startup when I was a freshman at Denison University in a completely different domain of automotive safety technology. And I actually had the big idea for Spendly after I analyzed my uncle's $70 million company merchant services agreement and discovered he was overpaying about $550,000 a year. And the best part was the vendor relationship was over a decade long. So it seemed as though there were some opportunities on the OpEx side of the P&L that were pretty ripe for the picking to help lower costs and accelerate EBITDA growth. And it seems like a lot of people are more focused, as they should be, on cash flow and management of companies and operations, more so than getting into the nitty gritty, the line by line invoices and agreement provisions, terms, and rates to determine if they're paying the proper amount and the agreed upon rates and terms. So thought about a unique opportunity to bring together technology to automate this process and to increase financial efficiency.
Fantastic. Well, look, I think it's very timely. I know that a lot of, over the last few years, there's, even in the tech sector, there's been a lot of kind of consolidation, but also companies realigning their spend. And I think having a lever to pull beyond reducing headcount, looking at your subscriptions, your cloud, your suppliers, can be a very effective way of reducing the costs and increasing the efficiency of the company. So tell us, what's the, so I totally get where you're coming from and the value that brings. Maybe you could let me know where you are on this journey right now. I know you're in startup mode right now, but I understand you've kind of found a sweet spot there. Is that right?
That's right. We launched officially in 2023. And we've raised a pre-seed round. One of our investors is Plug and Play Tech Center, one of the biggest accelerators in the world, and first money in on PayPal, Dropbox, and I believe over 30 other unicorn companies. And we've been pivoting and making changes to our cost reduction strategy as well as to our business model. And now we feel we've really reached product market fit. There's no upfront cost for Spendly because we make money from a portion of realized savings, not estimated savings, but actually realized savings, which is congruent with the smallest of businesses all the way to major enterprises. And our solution's non-disruptive to operations as well, because there are no vendor changes that are required. Whereas originally there was a vendor change required and just finding the best offer in the market. And we found that most folks, even small companies, it's a headache and it's distracting. So we've pivoted and made adjustments based on market feedback, and we found a sweet spot. So we have recently been gaining a lot of traction in healthcare, specifically in the dental space and multi-location healthcare companies. And as of recently, we're starting to expand into brand and retail and have some POCs lined up with Fortune 1000 companies. So we're definitely gaining a lot of momentum. We're at the university as well. So our model's nice because a lot of these expense categories are ubiquitous across all industries and P&L statements, regardless of whether it's a construction company, a restaurant, brand retail, healthcare. So we're really focusing our expertise on these specific expenses and the vendors and how we can help lower costs with those existing vendors more so than a specific industry. But we do have case studies we can reference to allow someone to understand that we understand their intricacies of their business and their schedules and operations. So it's as seamless of a process as possible.
And so you're finding that there's common cost categories across all sorts of different businesses. So, spoiler alert, can you tell me what are the juiciest cost categories when you see them that you think there's something can be done here?
Certainly, SaaS is one for sure. SaaS IT services.
I'm
I would
surprised.
say, I would say telecom is another category we
Yeah.
think is pretty low hanging fruit. Shipping is growing pretty rapidly as well. Like the general rate increases for the major carriers have increased at record highs over the last 3 consecutive years. 40% of all profits from carriers comes from surcharging. So there's normally a lot of
Yeah.
room for improvement in those three categories as well. But on average, in other categories like health benefits, insurance, payroll services, ERP platforms, cost savings can
Okay.
run anywhere from
So,
20 to
and
30%.
is it CFOs or financial controllers or COOs or who tend to be the personas in your in your customer companies that are wanting to use this and can get the benefit from it?
Yeah, I would say more mid-market approach. It's probably CFO, COO. And then when
Yeah.
it gets to enterprise level, normally it's the innovation teams that are driving innovation and looking for startups that can help add value in some areas of focus. And then ultimately it moves to, working directly with their procurement team or their financial operations teams. And then for small businesses, it's normally the owner because they're the ones that make the financial decisions. So it
Yes.
really depends on the scale
Yeah.
of company and
Yeah.
size.
And do you think that you're in the stage where you're, I think you mentioned that you have customers of different, of different sizes and different industries. Are you kind of at the stage where you're identifying where the sweetest of the sweetest spots are within that, and you might be going to specialize, or is it more? Talk to me about that maybe a
I
little
would say
bit.
more mid-market enterprise is probably our sweet spot when it comes to overall size. The reason being is
Yeah.
these companies of this size are spending hundreds of thousands at a minimum, most of the time millions to tens of millions of dollars in these expense categories. So even the
Yeah.
smallest of a portion of savings is significant and going back to the bottom line, relatively
Yes.
millions of dollars a year. We see that the hard dollar top line savings amount is the most exciting and attractive more so than a percentage.
Yeah.
So that's why
Okay. Yeah. Well, I mean, I can see. Look, the motive is huge because if you can continue your operations with reduced cost, that means you're running a more profitable business. So, I'm just wondering then, what's the user experience on Spendly? Is it difficult to onboard, or how can your platform get a handle on all of those cost categories and identify, opportunities to reduce costs? How does that
we make
happen?
it as simple as possible. So after we decide to ultimately take next steps and work together with the company, we identify the priorities of where cost reduction is top of mind. And then we share, depending on what that expense category is, a list of information that will need to be uploaded. And so as far as experience go, if somebody knows how to upload a document, it's pretty much a
Yeah.
drag and drop experience. And then our team does all the heavy lifting. And we have some specialists that are able to review these agreements and data points to determine where there are overcharges, hidden fees, or non-optimal pricing structure. In combination, we're training LLM to do this work as well. So it's at a fraction of the time. And we'd like to think is twice as accurate and effective over time and being able to train the
Yes.
model. And then from
Yes.
there, companies can either allow us to directly work with the vendor to oversee these negotiations and get a refund. So it's a truly white glove experience. Some teams would prefer to be included on the calls and just allow us to drive and handle these conversations, and they're informed every step of the way. It's really just a matter. And then ongoing, we're the ones that are responsible for the benchmarking to ensure month over month for an extended period of time that these rates and terms are being honored and savings are being realized.
Okay. So there's a kind of onboarding discovery phase, then there's analysis and reporting, and from that comes a kind of strategy that you communicate to the client, and either the client can then adopt that and go about talking to the vendors, or you can yourselves facilitate that part of the process on their behalf.
That's right. About a four-step process.
Yep.
So most companies would
Great.
prefer us to work with the vendors.
Okay, so so these vendors, when they see you coming, they know it's going to be bad news.
I don't know about that. I would say we use more of a data approach and looking to drive
Yeah,
costs down. And I
yeah,
kind of explain it this way. If somebody's been sold an extra large t-shirt and they're a size medium, and we go back to the brand or the retailer and swap it out for a medium size, it's at least you're keeping a customer, and the customer gets to wear what
yeah,
they want and the size that fits them best, as opposed to like,
yes.
returning the shirt and they lose a customer for life.
Okay.
So I like to think of it more of a win-win structure.
Yeah. Okay. So that in a positive way, you can actually help these suppliers to maintain their good standing and reputation with their clients by identifying ways in which they can better service them, and maybe not be providing services that are maybe unused or inappropriate.
I agree. It gives them an opportunity to keep their client, and also, if anything, forge a stronger relationship. And you know, our tool
Yes.
is giving them more visibility into areas where they can, reduce costs and run more efficiently. And sometimes that means
Yeah.
making some changes with services that they have with their current vendor.
Okay. Great. And from what you've said, I understand that you've got analysts plus AI at the back end. So, I mean, the the information that, or the documents that are being uploaded would contain, they could be sensitive commercial information, there could be contracts. So how do you give your clients confidence that their documents are going into another environment and there may be an LLM? How do you give them confidence that the confidentiality and the security around that can be maintained?
Yeah, I mean, well, first of all, we sign an NDA before we ever bring on any information that's could be sensitive and confidential. And we're also working
Yes.
in a mutually agreed upon data room, so all the documents are safe and stored correctly. We're also SOC 2 compliant. And so we're not creating off the shelf, we're not reinventing any LLM information technology. We're using kind of this more off the shelf approach. So those that have those very strict requirements and oversights, we've made sure that they're upholding all of our requirements from a security standpoint as well. And none of the information is being shared or sold externally. It's all for internal purposes as a tool to optimize spending and cost reduction. So that's really more of how we're using specific instruments that were developed.
Super. Um, so tell me, where to next? What are your plans and priorities for the next 12 months?
I'd say for the next 12 months, we have a partnership that we're completing right now with a company here in the States that is going to help us scale pretty rapidly within the small business industry. So we're
Super.
in the middle of a pilot program with them that is producing terrific results and cost reduction for small
Right.
businesses, and it's an efficient, scalable way for us to build out that module of our go-to-market strategy and our growth, and to continue rapidly expanding within the middle market and enterprise industries. And my goal is to ultimately become a verb for Spendly, so every household around the world, as well as finance department or procurement team, says let's Spendly it. There's let's Google it, let's Spendly it. And I feel the traction we're generating now with our first set of POCs with Fortune 1000 companies, and expanding through other channels of equity and M&A firms within mid-market. We're every day getting closer to becoming that verb that's universal.
Super. And so I think you're really beginning to get that traction. You're opening up channels. You're piloting through them, getting very positive results. So you're strapping in for quite a bit of growth by the sounds of things.
That's right. That's right. And I'm excited. I think to your point, kind of specialize earlier, I think there does get to be a point as a startup and having discernment of being able to show that something is proven and repeatable, and you don't also want to be a one-trick pony. And investors don't like that either. And I don't know, as a team, we don't necessarily want to only have one industry or one specific size of company that we focus on. We'd like to show that we are gaining traction, of course, with time in other
Yes.
categories and other industries. So it feels good to show that we're gaining traction in different segments of the market across different industries. We really have we have clarity on our ICP and persona that brings on Spindly, and that's always an exciting place to be. When you can show that month after month after month.
Nice, excellent. And well, it sounds like you've kind of reached a very significant base camp, and that you're now really in a position where you've found that product market fit, and that you're into that scaling journey, and that you're as you say, you're identifying the mid market, and then maybe specialist partners to go through to the companies that are small to medium size, a bit below the mid markets. It sounds like it's going to be an exciting time ahead for the whole team. And I wish you the best of luck on that journey.
Well, thank you. It's great to speak with you, and we'll definitely have to keep you posted, even if it's on a quarterly basis. And appreciate you also
Absolutely.
acknowledge your foresight for finding us and acknowledging what we do. And we'd like to think we're on the cutting edge, hopefully not the bleeding edge, but the cutting edge of technology that can help make our world a more efficient and better place.
Well, I would think so, and so highly relevant at this time, of so much uncertainty, that getting costs under control can be a great strategy for every company. I think.
Absolutely.
So well done, and best of luck on the next steps.
Terrific. Well, thank you. It's great to be here today.
Cool.